Friends, just check if we are live now. Yes, we are live now. Indeed, indeed, a warm welcome to one and all. I, CA Pratik Neve, welcome all of you on behalf of Zest Learning. Zest means enthusiasm. Enthusiasm, zeal for studies. Yes, we show enthusiasm in each and every aspect of our life. So why not enthusiasm in academics? Why not enthusiasm in academics, which is going to lay an amazing foundation for our bright life? Yes, with that wonderful idea, Zest Learning is set up, and we have been training at Zest Learning students of chartered accountancy from about past 15 years. And yes, we are we were majorly offline coaching. Now we are online coaching also, and mainly now we are catering to students of CA final. Yes, via indirect taxes, we are telling students how exactly they should approach a particular subject. Yes, so we are maintaining wonderfully two notebooks, provisions and concepts notebook and sums notebook, and doing all the things. So this way, if you systematically carry out every subject at your CA final level, surely you will achieve your dream of being chartered accountant and lead your life as a successful citizen. Yes, so friends, we have been doing value of supply. I hope all of you have followed well value of supply. Accessible value shall be transaction value, that is price actually paid or payable for supply of goods or services or both, where supplier and recipient of supply is not related to each other and price is the sole consideration. Yes, good evening to one and all. Yes, this is 15.1. 15.2. 15.2 what this value should include. 15.3 what this value should exclude. So all these things you have understood very well, and you know this value which you calculate, on this value you will apply the rate of GST as notified. Okay, so accordingly the GST is computed. There is goods and services tax, which is on supply. The taxable event in GST is supply. On intrastate supply of goods or services or both, there is charged CGST plus SGST. On interstate supply of goods or services or both, there is charged IGST. All of you know this. And yesterday, have you all understood how to do valuation in case of foreign exchange services? Rule number 32, sub-rule 2, clause A we have done. Sir, but why do we land up in rules? Why do we land up in rules? We land up in rule because if AV cannot be taken as TV, then valuation is determined as per prescribed, and it is prescribed in rules. Correct? Section 15, subsection 4 is telling us that go to the rules. So which rules in CGST rules talk about doing the valuation? It is rule number 27 to 35 of CGST rules. Isn't it, Ashima ji? 27 to 35 of CGST rules. 27, where price is not the sole consideration. 28, supply is to a related person or a distinct person. 29, supply is to an agent. 30, residuary, that means if you cannot follow 27, 28, 29, then you go to 30, that is residuary. 31, residuary, if you even cannot follow 30, you go to 31. 32 is doing valuation in specified services. When you are following 32, when you select 32, then it will override everything in the chapter of value of supply. 33, pure agent. 34, how to determine rate of exchange in case of import export of goods and services. And 35, if given value is including GST, then how to determine assessable value. So have you understood like what 27 to 35 you can expect in this? Yes, sir. And yesterday we started with 32. In 32, subrule 2 we are doing, and in subrule 2, clause A we have done. So now can we go to clause B? All of you with me? Can we check 32 to B? Yes, sir. So before that, what is 32 to A? 32 to A is saying, listen carefully, if you are buying or selling foreign currency as a bank or as a authorized dealer, then what you should do? You should check what profit you are earning. Okay, so in short, you should find difference between buying rate slash selling rate as the case may be and the Reserve Bank of India reference rate. This difference multiplied by units of foreign currency exchanged, that gives you accessible value. But what if RBI reference rate is not given? If RBI reference rate is not given, then check what is the foreign currency exchanged in terms of rupees. Okay, calculate 1% of that, that will become accessible value. Do you remember in yesterday's example that ABC foreign currency was exchanged and rupees involved was 7,50,000. So accessible value was 7,50,000 into 1%, that is 7,500. And eventually, if none of the currency exchanged is rupees, then how will you find accessible value? If none of the currency exchanged is rupees, then find out the rupee value of both the currencies by applying Reserve Bank of India reference rate. Pick up whichever is lower and take 1% of that. Do you recollect in yesterday's example? uh, 6,80,000 was, one of the currency converted in rupees, and another was 6,76,600. So we picked up 6,77,600 and we took 1% of that as accessible value. So this way, I hope you have understood yesterday's 32 2A. Now let's go to 32 2B. So 32 2B is of course optional. Okay. And if this option is exercised, then what will be the value? So it will be as per slabs. Okay. So once write in the chat window slabs. Okay. So see, a person supplying the services may exercise the option to ascertain the value in this clause for a financial year, and such option shall not be withdrawn during remaining part of financial year. So once you exercise this option, it can't be withdrawn during remaining part of financial year. Getting the point? Yes. So can I check how value has to be computed applying slabs? So what you do, in this clause, under at the option of supplier of service, value in relation to supply of foreign currency, including money changing, shall be deemed to be, okay, where gross amount of currency exchanged is up to rupees 1 lakh. Okay, means check in rupees term, if the value is up to rupees, value of currency exchanged is up to rupees 1 lakh, then what will be the value of supply? Value of supply will be 1% of the gross amount of currency exchanged, or 250 rupees, whichever is higher. Did you understand? Even if no, absolutely no problem. If you can observe, yesterday, where did we do it? Oh, we did it in the sums notebook. This was ought to happen. Okay, we did this in the sums notebook. No problem. So we'll continue there. Do you remember B, optional? Are you all with me? Yes, B, optional. If such option is exercised, If such option is exercised, it shall not be withdrawn. It shall not be withdrawn during remaining part of financial year. Okay, so can I tell you what is the value in this case? Put a hash, go to next page. Let's discuss the value. Okay, so value is based on slabs. In simple language, I'll tell you for first rupees 1 lakh. For first rupees 1 lakh. Okay, currency exchanged we are considering in terms of rupees. So for first rupees 1 lakh, it is 1%. 1% of amount or rupees 250. Government says value here you can't declare less than 250. So rupees 250, whichever is higher. Did you understand? And even if you don't, no problem. After 2 minutes, with the help of sum, surely you will understand. So this is the first slab. Second slab for currency exchanged between between rupees 1 lakh to rupees 10 lakh. Okay, so you know for first 1 lakh it is 1%. So it will be 1000 rupees plus 0.5% of 0.5% of amount in excess of rupees 1 lakh. Simple. On first 1 lakh 1%, which is 1000, plus on amount which exceeds 1 lakh at 0.5%. Is it clear to all of you till this point? And can I write third point now? Third point is on amount exceeding, yes friends, on amount exceeding rupees 10 lakh. Now you all know that on first 1 lakh it is rupees 1000 plus next 9 lakh it is 0.5%. 9 lakh into 0.5% is 4500 plus 0.1% of amount in excess of rupees, yes friends, in excess of rupees 10 lakhs or rupees 60,000. Government says it can't exceed rupees 60,000. So whichever is lower. Did you all understand? Ashima ji with me. Have you completed writing this? Once you complete writing this, let me know so that we can go ahead. Say D in the chat window. So we can go to the sum based on this. Constantly reading your chat window. Yes, you are saying done. Fine. So we'll go ahead. Go to the question based on this. Okay. So today's agenda is pretty simple. We can complete 32 easily. Go to question based on this. Question number, yesterday we did question number 11. Can we do question number 12 now? All of you with me? Question number 12. MNO, Messrs. MNO Limited, Delhi is authorized money changer registered under FEMA 1999. It has entered the following transactions for supply of money changing. First transaction. What is first transaction? 600 transactions of conversion of dollars into rupees, that's fine, of rupees 20,000 per transaction. So friends, can you tell me, for 20,000 rupees, what slab will you apply? You will do like this, 20,000 into 1%, which is rupees 200. So value of supply will be 200 rupees per transaction. So government says that we don't want to go into any calculations. Just take 1% of your 20,000, which is 200, but every transaction's accessible value should be at least 250. So 200 or 250, whichever is higher. So accessible value, very good, shall be 250. But how many such transactions have taken place? Such 600 transactions have taken place. So it will be 250 into 600. Did you all get it? Shall we go to next one? In next one, 500 transactions of conversion of dollars in rupees, and it is of rupees 1 lakh per transaction. So how will you do? 1 lakh per transaction. So 1 lakh per transaction, what you will do now is 1 lakh, exact 1 lakh it is. So 1 lakh into 1%, which is 1000 or 250, whichever is higher. So do you agree your accessible value will be 1000? Did you get it, all of you? Shall we go to third transaction? And yes, such things are asked in the exam. Say D in the chat window as you complete it. Have you understood? Shall we go ahead? Yes, no? Next. 100 transactions of conversion of euros into Indian rupees of 500 lakhs per transaction. How will you do this value? 500 lakh per transaction means 5 crore. So how will you do? See, rupees 1000 on first 1 lakh. Do you agree? Next 9 lakh means 1 lakh to 10 lakh. Next 9 lakh you will do at 0.5%. So which is 4500. Do you agree with me? All of you? With me? Yes, no? And next 4 crore 90 lakhs means next 490 lakhs into you will do 0.1%. Did you get it? So how much it is? 1000 plus 4500 plus 49,000. How much you are getting? Very good, Ashima ji. Are you getting 54,500? Yes, sir. So now value will be 54,500 or 60,000, whichever is, yes, lower. So your accessible value will be 54,500. Did you understand? And eventually, and lastly, what you will do? 1 crore rupees, 100 lakhs. So for 100 lakhs, how will you do? See, you know for first 1 lakh it is always 1000. For next 9 lakh, which is between 1 to 10 lakh, which is between 1 to 10 lakh, it is on this 9 lakh at 0.5%. You know it is 4500. And next 90 lakhs, it is how much? For next 90 lakhs, it is at 0.1%, which is rupees 9,000. So are you getting 14,500? Yes or no? Yes. So 14,500 or 60,000, whichever is lower. So accessible value will be 14,500. Did you all get it? 100%. Let me know quickly in the chat window. Did you understand this? How valuation happens in this case? So go ahead and complete it. And what we have to do? Easy. Very good. Very good. Nice to know that you found it easy. This is your question number 12, page number so and so, TOS and VOS. Go ahead and start doing it. One point to be understood is everywhere we found out the value that was per transaction. In first case, it was 600 transactions. It's given in the question. In second case, it was 500 transaction. In third case, it was 200 transactions. Getting it? So can you go ahead and complete this? In third case, what was the figure? It was not 5 lakhs, no? We did not do third case. 5 lakh. In case of 5 lakh, what will be the accessible value? We did not do it. In case of 5 lakh, what will be the assessable value? On first 1 lakh thousand, on next 4 lakh at what? 0.5%, which is 2000. So value will be 3000 and such 200 transactions. So I hope all of you got it. Can you complete it? Have you started doing it? Giving you 2 minutes, Ashima ji. Go ahead and complete it. Say D in the chat window as you complete it. Yes, so till what point have you reached? I'll just be back on your screen. Yes, fifth point. Wonderful. Wonderful. Yes, so I'll be just out of your way so that you can complete the solution systematically. Wonderful. You are saying done. Amazing. So is 32 2b absolutely clear to all of you? Can I go to 32 3? Yes, sir. Go to 32 3. What is 32 3? Try to understand. It is about air travel agents. You know, there are so many travel agents. Air travel agents means who do air ticket booking. Okay, it is for them. Rule 32, sub rule 3 is for them. Okay, so let me tell you in simple language. Okay, see, when I was talking about foreign exchange, then I may not exactly know what is the profit margin of the dealers, authorized dealers, or I may not know what is the profit margin of the banks dealing in foreign currency. So bank has set those percentages, 1%, okay, for currency exchange up to 1 lakh rupees, exceeding 1 lakh to up to 10 lakh rupees, 0.5%, and exceeding 10 lakh rupees at 0.1%. That is the accessible value which government has set. Getting it? That is deemed value. So no one can challenge it. It is fixed by government by doing some observation in the industry that what is the usual profit margin in those cases. Getting my point? Ashima ji, what was done in rule number 32, sub rule 2, clause B. And in clause A, directly we were finding the profit margin by comparing with Reserve Bank of India reference rate. Clear? The analysis part, the logic part of it, is it clear? Yes, sir. So 32 2A is clear, 32 2B is clear, both logic is clear, both calculation is clear. Okay, as we go ahead, we will keep on doing practice questions on the same. But as of now, we can put a full stop to 32. I mean, we can put a comma to 32 2, isn't it? A and B. Now, going ahead, 32 3. So, these air travel companies, these air travel agents, they would not like to disclose their margin, isn't it? So, what is their profit margin? So, their profit margin, no one knows and they won't like to disclose. So government says in case of domestic bookings, the profit margin will be deemed at 5%. How much? 5% of basic fare. Okay, please once type in the chat window basic fare. So it's 5% of basic fare. Okay, and in case of international bookings, it shall be profit margin will be double. It will be deemed to be double. So it will be 10% of basic fare. Yes, we are talking about companies like Go Ibibo, Make My Trip. If they decide that they will do valuation as per 32.3, then whatever is the basic fare of the air ticket, of that 5% will be the accessible value on which GST will be payable, and in case of foreign bookings it will be 10%. Is it absolutely clear to all of you? So write down in your provisions and concepts notebook, write down air travel agent or air travel agency services. Rule 32 sub rule, yes, rule 32 sub rule 3 of CGST rules. There are two possibilities. Possibility number one, it is domestic bookings. So for domestic bookings, The value shall be deemed to be, means a deemed value. The value shall be deemed to be 5% of basic fare. Did you get it? For international bookings, it is exactly double. Double means how much? It is 10% of basic fare. Is it 100% clear to all of you? Shall we go ahead to question based on this? Complete writing it. We'll go to question based on this. Go ahead to question number 13 and question number 14. Try getting answers for 13 and 14 by yourself. I give you 2 minutes. 2 minutes. Try getting answer yourself on 13 and 14th. Yes. How 4 crore you are getting? Let us check. Messrs. So 13th question. Messrs. Airline Associates has sold tickets for transport of passengers to Singapore. Yes. So we are talking about Singapore, international, and other foreign countries during the month of Jan. The total amount charged is 30 lakhs on the flight. Okay, 100 tickets, of which 10 lakh is towards passenger taxes. So actually, I will get 30 lakhs less 10 lakhs. Why less 10 lakhs? Because 10 lakhs is towards passenger taxes. So how much is basic fare? So basic fare is actually 20 lakhs. So assessable value will be 20 lakhs into, we are here talking about 10%. Did you all get the point? Ashima ji, 20 lakh into 10%. Why 10%? Because we are talking about international bookings. So 10% is the deemed value. So value will be 2 lakhs. And GST on that will be at 18%, which is 36,000. Did you get it? Yes. So what answer you had got? How did you, I mean, what was your thought process, Ashima? What was your thought process earlier? I did not get it, but I hope now you have understood it. Please let me know if any doubt. Basic fare of the air tickets which they sold is 20 lakhs. Getting it? Okay. Then 14th, Messrs. Kamal Associates has sold tickets for transport of passengers from various domestic flights during the month of Jan. The total amount charged is 90 lakh on the flight, of which 10 lakh is towards passenger taxes. Now can you tell me how much is the basic fare? So basic fare is 90 lakh less 10 lakh, which is 80 lakh. So 80 lakh into, we are talking about 5%. Why we are talking about 5%? Yes. Okay. Got it, got it. 5. Okay. So you were saying no, no, 30 lakhs is total. So Ashima had given one answer. She's just clarifying for that. No problem, Ashima. I hope you understood. 30 lakh was total amount charged for all the 100 tickets put together. It was not 30 lakh each ticket. I hope you got it. So 80 lakhs into 5%. So accessible value will be, yes, rupees 4 lakh. And Ashima, you just have to calculate GST on that. So GST on that at 18% will be 72,000. Did you understand? So no need to calculate 4 lakh plus 72,000. I hope you got it. This 4 lakh is accessible value and this 72,000 is GST on that. In above case 2 lakh was accessible value, 36,000 is GST on that. I hope it is 100% clear to you. Go ahead, show the working. If any doubt, please let me know. 10% of basic fare because we are talking about international bookings. Once you complete this, say D in the chat window. I'll show you solution for 14th. Yes, so just say D in the chat window as you complete it. Yes, so you are saying completed for this. So I'm going to now go ahead for showing you solution for 14th. So in 14th, it is domestic bookings. So what you are doing, basic fare you are calculating, which is 80 lakhs, and of basic fare, you are taking deemed assessable value as 5%. Getting it? So complete this and also calculate GST on that, which is at 18%. And as you get it, please say C in the chat window. Okay, Ashima is saying scroll up. So exactly which point you want, Ashima ji? This was done, na? 13th is done, na, Ashima. You are on 14th, right? So let me know if you want me to show the solution of 13th. Please let me know accordingly. Okay, 14th is also done. I'm waiting. Once 14th is done, say see in the chat window. Okay, okay. Do it, do it. No problem. Take your time. You said na scroll up, so I got confused. Actually, in short, you wanted me to show the 14th. No problem. Okay. So now, friends, going to rule 32, sub rule 4. Are you all ready for 32.4? Of course, in future, we'll keep on practicing many questions on these issues. Okay, we never close a particular topic. Okay, practice sums will continue. Now, going to 32.4. What is 32.4? It is for life insurance business. Okay, it is for what? It is for life insurance business. Okay, please understand what it is. Are you all with me? First, you will understand what happens in life insurance business. See, understand, you know, this life insurance business, they sell you two type of policies. Majorly, there are two types of policies. One is called as endowment policy. What it is called as? Endowment policy. And one is called as term policy. Which policy? Term. So friends, what is the role of life insurance? What is the main objective of life insurance? Main objective of life insurance is to secure the life, means if insured person expires, then his nominees get the sum assured. Getting it? So if insured person has taken a life insurance of, say, sum assured of 1 crore rupees, and it is term policy. So for example, at the age of my 30, I took a policy of 40 years, okay, and of which sum assured is 1 CR. So from the age of 30 to 40, I will keep on paying premium per annum. So say per annum, my premium is 12,000 rupees. Okay, now thankfully nothing happens to me till the age of my 70. Then whatever 12,000 rupees per annum I have paid, I will not get anything back. But if unfortunately, okay, the policy holders dies between this age of 30 to 70, then his family members, the nominees, get the sum of 1 crore rupees. Did you understand? That is term policy. So term policy is a pure life insurance product. It is a pure life insurance product. So in this, whatever is the premium paid, in this, whatever is the premium paid is equal to assessable value. So for this term policy, rule number 32, sub rule 4 does not apply. There is no need of 32(4) for this, because entire premium paid becomes assessable value. Is it clear to all of you? Entire premium paid itself becomes assessable value in the term policy. Did you get the point? Now, what is endowment? Endowment is a mix of both. It is mix of both. What both? It is mix of both. It is mix of life insurance plus savings. So, on the life insurance part, on the life insurance part, for the life insurance part, whatever is the premium allocation, only on this part there will be GST. On savings part, there will be no GST. Did you get my point? So let's try to understand endowment policy in more depth, because 30 to 4 applies for deciding assessable value in these cases. Getting it? I'll give you one simple example. CAPN has life insurance. CAPN has life insurance, means I have taken CAPN, I have taken life insurance. SA means sum assured rupees 20 lakh. Sum assured rupees 20 lakh, premium to be paid, premium to be paid for 25 years of rupees 80,000 each year. Did you get it? Did you get it? What is the sum assured? Sum assured is 20 lakhs. Okay. And maturity amount. So what will be the maturity amount? After 25 years, the maturity amount will be sum assured, that is 20 lakh, plus bonus. So friends, I will be getting 20 lakh rupees plus bonus after 25 years of the paying term. And if anything happens to me, unfortunately in this 25 years, then I'll be getting, I means my family will be getting 20 lakh rupees. Did you understand? So this is a mix. So what did you understand from this? From this one thing you have observed that this product is a mix of life insurance. This product is a mix of life insurance plus savings. Are you getting the point? This product is a mix of life insurance plus savings. Yes or no? As as insured person, as insured person is getting sum assured plus bonus. Okay, in blunt language, if he is alive, if he is alive after 25 years, and if he expires within that, he is getting what? He is getting, I mean, not he, his family is getting, his family is getting sum assured. Did you understand? Did you understand what I'm trying to say? See, I have used blunt language, but it is easy for me to explain you this way. Clear, all of you? Shall we go ahead? So now, what is 32.4 saying? Rule 32.4 is first of all only for endowment policies. You must have understood. It is only for endowment policies. It has nothing to do with pure life insurance, because in pure life insurance 100% of the premium is assessable value. So 32.4 is only for endowment policies. Now they are saying there are two possibilities. First possibility is that it is ascertainable, it is ascertainable from contract or terms as to how much premium, how much premium is allocated to savings. Very good. If it is known, then if it is known then if it is known then assessable value will be equal to total premium minus premium towards savings. Did you get the point? So this will be the assessable value. Any doubt in this point? If but very few policies will do that. Why will insurance company tell you how much is towards savings and how much is towards actual insurance? So it's hardly this thing will happen. So most common is not ascertainable. Not ascertainable is most common. Okay, so if it is not ascertainable, there are two possibilities. What two possibilities? It is single premium annuity. It is single premium annuity. In single premium annuity, assessable value will be equal to 10% of premium. Did you understand? Whatever is the total premium, of that only 10% will be assessable value. So government is saying only 10% goes towards life insurance. Balance 90% goes towards savings. That's what government has to say. So only 10% of premium is assessable value. Did you understand this point? Single premium annuity means only once you pay the premium and then you enjoy the benefits over a number of years. Clear? And other policies. Other policies means you will pay for multiple years the premium. For first year premium, in the first year premium, assessable value will be equal to 25% of premium. 25% of premium. And second year onwards, government says only 12.5% of premium. Did you all understand? Ashima ji, did you get the point? And all of you? Say D in the chat window as you complete it, and surely you will understand better with the help of one sum that is coming up. One typical sum is coming up for this, but once you complete writing this, say D in the chat window. Very good. Let's go ahead. Let's look at that sum. So we have covered all the things in 32.4. Okay. Let's check sum based on this. Question number will be 15. Am I right? Check. 15th question. LIC of India provides you the following information for the month of Jan. You are required to compute value of taxable supply of services under Rule 32.4 of Determination of Value of Supply Rules 2017. General policies. In these general policies, total premium collected is 12,000 lakhs. Yes, you read it right. It is 12,000 lakhs because it is a business for Life Insurance Corporation of India. So out of this 12,000 lakhs, first year premium is 5,000 lakhs. So friends, 5,000 lakh multiplied by 25%. Do you agree? Because first year premium, on first year premium, assessable value is 25%. So balance 7,000 lakhs means 12,000 lakhs minus 5,000 lakhs. Balance 7,000 lakhs into 12.5%. Do you agree with me? All of you. That is the deemed assessable value. Check how much it is, you tell me. Is it 1250? And how much it is in this case? 7,000 into 12.5. And then single premium annuity policies. Premium collected is 850 lakhs. So you know here 10% of this 850 lakhs, which will be 85. These are the deemed values. We can't challenge it. Government has done lot of background work and they have come up with these numbers. Okay. Next, only risk cover policies. Only risk cover policies means term life insurance policies 30 to 4 will not apply. Entire 500 lakhs will be assessable value. Do you agree with me? And lastly, variable insurance policies where premium collected is 8,000 lakhs. It is given that 80% is allocated for investments. Congratulations. If such bifurcation is given by insurance company, then what will you do? Then 20% will be towards life insurance premium, isn't it? So 1600 lakhs. So have you all got these figures? Can you take the total and tell me what is total assessable value? That's what you had to find out. Value of taxable supply of services. So what is the figure that you are getting? And if any doubt, please ask Ashima ji, or if you have understood, please tell me the total. Let us see. 1250, 875, 85, 500, 1600, 4310. Perfect. Ashima ji, perfect. So can you go ahead and do the presentation part of it? Can you say question number 15 and start doing presentation part of this? Yes, this is last thing for today. Then in next session we will do 30 to 5, okay, 30 to 6, 30 to 7, 33 we'll do in the upcoming next sessions. Okay. So please complete it, and as you complete it, say D in the chat window. Is it 100% clear, Ashimaji, this concept of 30 to 4 with respect to life insurance? Please make sure that you write rupees in lakhs. Okay. GST is not asked in this question. You have to just calculate assessable value. That's it. Okay. Huh. So they are not rates actually, Ashima ji. They are the deemed values. Getting it? So this becomes accessible value. That is what you have to understand. So this 25%, okay, how you have to understand and how logically you have to keep in mind is earlier the year, higher is the value towards life insurance. Okay. Then subsequent premiums, that 25 becomes 12.5, and in case of single premium annuity plan it is directly 10%. So percentages involved are 25, 12.5 and 10. That's it. These are the percentages involved. And in air travel agent, 5 and 10. Yes. Remember, whatever figures you are getting, they are accessible values. Clear? On that, GST will be chargeable. I hope that point is clear. So on which point you are right now? So I hope nicely you have maintained provisions and concepts notebook, and you're doing all this sums in the sums notebook as well. Acha, you are on the D point. Acha, you are on D point, or have you done? Have you completed? What exactly do you mean to say? Okay, okay. So complete it. As you complete it, say see in the chat window. When I get see from all of you, then we will end today's session. Wonderful. So friends, thank you so much for being such wonderful audience. I'll just tell you what I always say. Arise, awake and stop not till the goal is reached. Famous quote of Swami Vivekanand ji. I think as CA final students, we all need to follow this. We need to arise, awake and stop not till the goal is actually reached. Getting it? That means we should make it priority. Our goal is our priority. Our CA final is our priority. We should, devote our full energy towards that. Yes. So, if you all want to subscribe to main lectures, you can get in touch with me on 9028777829. That's our WhatsApp number also. And it is one stop solution for your doubt solving as well as, all your inquiries. So, very important contact number. And please do subscribe to our channel, which is CA Pratik Neve, and do keep following it for more lectures. Thank you so much. I'll see you in the next session. Till then, keep studying, keep smiling. May God bless you all.